Hi, this is Mark Succarati with Whitecap Mortgage. I wanted to stop and take a moment to talk about how current events are shaping our mortgage rates. It's actually really crazy right now. And if you're in the industry or if you're in the market of buying or refinancing, you know what I'm talking about. So let's jump right into it. And let me show you some of the charts here. All right, so here's the 1-year mortgage bond chart. I went 1 year out just to kind of put things into perspective. Mortgage rates really tend to follow mortgage bonds. As you see this chart rising, mortgage rates are declining. All right, so here we are back last May, June timeframe. We were 4.25, guys, 4.25, 4.5. This is again to put things into perspective. Analysts were talking at that time, hey, rates are going to get better. There was maybe some talks about possible recession, but hey, rates are going to get better. Everybody be ready. And what do we see? Here in the next few months, rates got better just like they were starting to predict. All right, so now let's look at our 6-month average here of the bond chart. And what do you kind of notice here? Right, we're flat. Mortgage rates kind of stabilize. You see a lot of kind of daily movements going on, but all in all, we're flat. And we were about 3.75% here, 4%. People really started taking a look at refinancing at this point. Some debt structuring. Hey, me personally, I actually refinanced my home back in November. So, however, if we take a look at this quarter, what do we notice? Right off the bat here, and a drop in interest rates. 2020, here we are in January. The next 2.5 months, a rapid movement. I want to stress that. A rapid change in the market. We went 3.75 in the beginning of the year, and we thought the market will probably get a little bit better, as they were predicting. But here we come. Coronavirus. A lot of worry, anxiety, unease. We saw the stock market taking some losses. And so did interest rates. Interest rates started coming down. At this point, now your mom is telling you should refinance. You're watching your friends refinance. Everybody's talking about such great rates. Everybody started looking at refinancing and taking advantage of this market. And so what happened? The lenders were forced to take on all this business that they weren't ready for, right? And so everybody was trying to get these loans closed and trying to help every client that they possibly could. But we saw some stress starting to apply to the lenders. And rates continued to get better. So we saw 3%, all the way down to 3% here. And this was probably about 2 weeks ago when we saw the best rates on March 9th. Lenders were very stressed out. There was more worry, more anxiety, more unease as time has come closer. And so what do you see here? We see a drop in the market. We saw the possibilities of liquidity issues with the banks. Not only were they trying to close all the loans that were coming at them, we can see lending at a high rate can cause some liquidity issues with the banks. Withdrawals of deposits can cause a liquidity issue with the banks. When we see worry and anxiety, what do people start doing? Their stock market, you're watching your 401k, people start taking some money from the banks, right? And this is causing this liquidity. They're lending at a high rate and people are pulling money out of deposits. And so here we are. In 1 week, dropped from 3% to 4.75. Okay. Fed comes in on Sunday and it makes their announcement. Here's Monday, And we see the market's reaction was very positive to the Fed's help. However, the lenders are still at capacity levels. They can't take that business on like this. So they have to pump the brakes, and they have to start increasing rates a little bit to slow things down. Okay. Here we are. Another rapid swing. Today, we see the bond market recovering from yesterday's losses. But we're still at 4.5. Why such a good, positive mortgage bond movement? We only saw 4.5 today. Doesn't make sense, does it? Why isn't the rates moving with the market anymore? I mean, if you look at this line of where we are, where we have been the past day or so, and where we were, we should be in the mid 3s, low 3% range. That's where the market is telling us where we probably should be. But we're sitting here at 4.5. There's risk going on, right? You still have this worry, anxiety, unease. You still have the banks trying to close everybody's loans at a capacity, at a level that they weren't ready for. And on top of it, we've got some liquidity issues. So banks still have to keep the rates at a point where they can manage the business coming in. They raise the rates a little bit, kind of keeps business at a pace until they can thin out their pipeline. So we are predicting, and the experts are predicting, that this is going to start making sense again. We will see the rates kind of get in line with where the market is once lenders kind of thin out their pipeline. So guys, what does this mean to you? All right. If you're thinking about, if you're in the process of refinancing, don't lose hope. Just stay patient. We're going to see the rates get back down into the mid 3s when lenders clear out their pipeline. So, but you have to be ready. You have to be communicating with your lender on probably a daily basis via text, an email, because as you can see by my chart, the rates are moving so rapidly. 1 hour can cost you 0.25% in your rate. And so if your lender reaches out to you and you don't get back until the next day, you might have lost a whole percent. So it's very important that you're staying in that communication. This is true also for buyers. If you haven't locked your rate yet and you're in the process of buying a home, you need to be communicating with your lender about these interest rates because they're changing rapidly. Don't get stressed out if you see one day they're quoting you 4.5, because you may see in a day or two, hopefully it's going to get a little bit better, but you have to act when the rates come down to where you are happy with. All right. Also, documentation. You need to be providing the documentation as quickly as you can to your lender. Everybody is being affected by the social distancing, the closures that are happening. And so not just you, not just the lender, your attorney, your appraiser, your title company, your insurance person, everybody is delayed. So the quicker you can provide your documentation, the better chances that you're going to close on time. Okay. And if you are thinking about buying a house, the market is going to be getting better once the banks kind of thin out their pipelines and things come back to a little bit of normalcy. But what I suggest is it's not too soon to get started. You need to get your pre-approval. And if you're worried about the coronavirus, the great news is with technology, you can apply online. You can call your loan officer to get started. But get started. Get your pre-approval done. Maybe provide some documents so you have a head start. And so when you do find your house, you're ready to go and you're ready to lock in, because rates are, again, going to get better and you need to take advantage of them when they drop again. All right, guys, I hope this was helpful. If you have any questions, please reach out to myself or my team. We're available and eager to help you. All right, thanks and have a great day.